So we're not replacing what we're mining in the gold space. Bottom line is, I think exploration and discovery are going to become more and more important and sought after and profitable as we move into the next few years.
Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And with us today is Brent Cook, the founder of Exploration Insights. He is an economic geologist. Brent, thank you so much for joining us today.
Thank you. Appreciate it.
Definitely. And we really wanted to get your take first on the precious metal markets, the price we're seeing right now, and kind of your outlook for the rest of the year.
Yeah, I mean, with the caveat that nobody knows what's going to happen, although it does seem we've returned a bit of stability here in the U.S., which is a positive. My sense is that we're going to see a pretty much range-bound gold price, probably for a few months going out. But once the stimulus and the effect of the stimulus on the dollar start kicking in, I'm anticipating a higher gold price by the end of the year, and that continuing into 2022. And I suppose silver will more or less mimic that. So I'm pretty positive on this precious metal prices. Quite positive on the base metals, particularly copper and nickel. What's really fascinating to me, and what I've talked about this for a few years now, is the dearth of new discoveries, deposits, and mines to replace what we're mining right now. That's kind of the important point, I think, that people are overlooking.
Yeah, and if you can expand on that, like with respect to, how are we mining really to replace metals? Because I know, especially in silver, a lot of the silver that's been mined is just kind of thrown away because it's used in technology, but then it's not worth it to recycle it because it's such a little bit of silver, and then it just ends up in landfills.
Yeah, exactly. With silver, I suppose that's the case. I guess, the bigger picture is that right now the industry is mining 90 plus million ounces of gold a year, which is about all the gold that's been pulled out of Nevada's Carlin Trend since discovery. So we're going through one Carlin Trend a year in terms of resource depletion. And we are not finding 90 million ounces a year to replace that. We're finding it at best half that, probably close to more of a third of that. So we're not replacing what we're mining in the gold space. Likewise, in the copper space, we're mining the equivalent of one Bingham copper mine, which is that big mine outside of Salt Lake, one of the biggest in the world, a year. And we're not finding and putting in production a Bingham Canyon a year. And right now, most of the mines, they're incrementally adding as they mine on the outskirts and this and that. But that's not going to replace what we're mining. It's a stopgap measure, if you will. So I guess bottom line is, I think exploration and discovery are going to become more and more important and sought after and profitable as we move into the next few years.
That's really interesting. So essentially what you're saying with some of the metals, and especially with gold, we're not producing enough right now. So it seems like, in my perspective, wouldn't that mean that the price would have to rise to encourage more mining then?
Yeah, to an extent. I mean, we're producing, call it 90 something million ounces a year. And that's going to run down unless we add to it with new discoveries. There's a lot of deposits sitting out there that are, we call, they're marginal at best, mediocre deposits, that some of which, with an increased gold price, will become economic. But most of those, from my perspective, and Joe as well, who is now writing Exploration Insights, most of those deposits have some sort of fatal flaw. The ounces are there, if you will, but either the metallurgy is too complex, the strip ratio, meaning the amount of waste you've got to move to get to the ore, is too much, too costly. It's in environmentally sensitive areas. There's geopolitical issues. All those things come into building a mine. And on average now, it's taking probably 10 to 15 years to find, develop, and put a gold mine in production, a big one. And a large copper mine is taking 15 to 20 years. I mean, here in Arizona, Resolution Copper there, that's been on the books now for over 20 years, and they still aren't even close to putting it in production.
Getting into that with respect to where you see the mining sector going in the future, do you see that mining stocks are going to be a good way to ride the rise in precious metal prices?
Well, hopefully that's what I'm doing. Yeah, for sure. I think that's the way to play it. I mean, it's very cyclical business, and metal prices are cyclical, and they rise up and down. Well, your commodity metals, copper, zinc, that sort of thing, they rise up and down with the economy. Gold's a bit counter to that, but certainly there's going to be a lot of money made in this sector, and there has been in the past too. I mean, it's not Tesla or Bitcoin, but in my view, that's probably a positive right now.
When it comes to investing in mining stocks, one of the big things you do is kind of, looking at them critically and saying, is this really a good investment? So can you kind of walk us through some of the things that you look at to figure out, is this company a good one to invest in? Sure.
I think the important thing to realize, especially with precious metal and gold projects in particular, is on average, and this is a study that Newmont did years ago, 1 in 10,000 prospects, which is a showing, which all these junior companies have, is some sort of, anomaly at surface. They found a rock with alteration or some gold in it, turn into an actual mine. So the odds of making a successful discovery and mine are extremely low, which is why gold sells for $1,800 something an ounce right now. It's not easy to find. So it's critical, and this is a whole section on itself, but the important thing in evaluating a junior exploration company is probably number one, in my view, is what the company is looking for, searching for, the type of deposit. Does it offer a big enough risk to reward to take that speculation? All too often I see these junior companies that are after a discovery that even if they're successful, it doesn't impact the share price, which is ultimately what we're after, is something impacting the share price. So the project that the company is going after has to offer the potential of a large enough discovery to offset all the risks and costs to get to actually documenting that is a legitimate discovery. And hopefully a major mining company buys it out and you're good. So that's probably the first thing. Is it a legitimate target? Is it big enough to make a difference? Second, are the people running it? Do they know what they're doing? Is this the type of deposit that they're familiar with and can evaluate properly? Is it a country or a jurisdiction that they're familiar working with? I mean, I see people jump from Finland to Mongolia, same company, to Malawi. It takes time to work up the experience of knowing how a country works, how a jurisdiction works, getting to know the people. So you want to be with a company that knows where they're at, knows the people, knows how to work the system, whatever country it is. So the people. Number three, I think, is probably financing. Are they competent in terms of how they're going to continue financing this project, ideally at a higher share price each time? And that goes back to the point of, what are the hurdles? What are the no-go decision points in this project? What do you as an investor need to see in terms of results to say, yes, this is working, I'm going to stick with it, versus this isn't working, I'm out? So I think that's the three really important things to keep track of.
You mentioned jurisdiction, and I think that's really interesting because if we look back at what just happened with the pandemic, you had some jurisdictions that considered mining to be an essential resource, like in Canada. So how did that play in? How did the pandemic play into kind of those evaluation criteria?
It's had an effect for sure, particularly in the more advanced type stages. I mean, at Exploration Insights, our exit strategy is more or less have the company be bought by a larger company, so a takeout, if you will. But with all the travel restrictions, most of the major companies are unable to go and evaluate a project. So that's put a real kill on the M&A, unless it's something where they're familiar with, where they're in country, they're working, they can go to the project without having to leave the country. So that's put a real crimp on a lot of the mergers and acquisitions. So, by default, what we've seen is a number of those in Canada, US, and Australia, because they've got, the mining companies are stationed there and they've got their people there. But there's a project that we're invested in Idaho, Liberty Gold. And they have, the Canadian companies have not been able to come down and review their data on the ground. So that's stalled any sort of, merger and acquisition potential from Canadian companies, or Australian for that matter. So it has a bit of effect. And then in the exploration side, Peru was locked down for quite a while, so people couldn't go there and do the exploration work. So an exploration program has been delayed by 6 months plus. Same thing in Alaska. Company were invested in Trilogy. Last summer, they had a big program planned, and they canceled the whole thing because the risk of taking the infection to an indigenous community was too high, and they wouldn't go there. So the whole program is put off till this year. So it has a bit of effect. Yeah, good point.
It is an interesting situation because hopefully, our hope is that these kinds of restrictions are just temporary, right? We want to return to normal. What do you anticipate? Do you anticipate the pandemic continuing to have an impact on the mining sector going forward for years to come? Or how long do you see this actually being of importance?
Well, it really comes down to how quickly we can get the vaccine out to the countries we want to go to. I think it's starting to get progress here in the U.S. Europe's starting to move on. Canada's surprisingly far behind. So I don't see much happening until at least this summer. In South Africa, they've just blown up with this new variant that may not work with the one vaccine they were using. So it's going to be a while before people can go to or come from a lot of the third world countries. Probably late this year is my guess. I'm just guessing.
One of the questions that we've gotten in the past is, one of the reasons to invest in precious metals is to combat inflation, right? It seems like when there's inflation coming, precious metals rise. Now, with respect to mining stocks, how does that work? Because it seems like inflation would also push up the cost of production, right? All the things you have to put in to get the gold.
That's a really good point. And a lot of people miss that. I think we saw that during the metals boom in the 2009, 10, 11, where the prices were going wide up, but every input into building and running a mine went up too. The steel, the labor, the petrol, all that went up as well. So the profits that were anticipated never came because your cost of production went right up along with the price of the metal. So that's a really good point. And that is one of the problems with these marginal plays that we were talking about earlier, is that, yeah, maybe the price goes up, but unless you can keep your input costs flat, you're not going to make any money. So that's a good point. And in terms of inflation, I don't know. I've been, for the past 20 years, I've been hearing about inflation. I don't know. Not my area of expertise. And it certainly doesn't seem to be rolling into people's considerations. You and I have seen the price of food, medical, insurance, assets all go up, but that's not really being recorded somehow. I don't know. Understand that.
You said how maybe towards the end of the year you could see precious metals rising. And we talked about how mining stocks often do give you that leverage. They often, if they're good ones, they rise more. What kind of considerations? Do you see that happening this time? Or could there be a situation that, you said we've seen in the past where the input costs rise as well, so the precious metal mining stocks don't really rise along with the metal?
so far we haven't seen input costs rising. And we're actually right now, the precious and base metal producers are doing better than they've done in a long, long time in terms of profitability. And this is sort of unusual in that the input costs haven't risen that much. And I suspect that what that's going to do, once we see a few quarters of continued profitability in the mining sector, we'll start to see the generalists come in and take these companies higher based on that. So that's another positive I think we're going to see this year.
One of the things when investing in like physical precious metals is that it's really for a long term, you kind of have to have a long-term perspective. What kind of perspective do you need to have with respect to mining stocks?
Cautious. Things can go around really quick. So you've got to keep track of it. I mean, the larger the company, the more diversified it is, the less volatility you're going to see. If one mine gets shut down by the government or there's a disaster at one mine, they've got 4 or 5 others going, it's less of an impact as if you've got a one mine company and the government decides they're going to take it over. You're down to zero. I don't know if that answers your question, but that's sort of how it works.
So definitely a cautious approach. Would you say in most circumstances, would you want to be holding for the long haul?
No, I think you've got to do it on a company by company basis. I mean, a company like Franco-Nevada, which is just has royalty streams, that's as safe as you can get. And they're diversified everywhere, commodity-wise, jurisdiction-wise, et cetera. And they're not really on the hook for the costs. They just get a little bit of the gold or whatever being produced. That's definitely the safest way to go. Yeah, I mean, that's as good as it gets. But you come down to one company with one project they're trying to develop in, say, Mexico, and they've got a resource, and now it comes time where the valuation, their evaluation based on a technical study shows it's worth $500 million. They need to raise $200 million to build it, and they need the permit. And the government says, no permit, you're not getting the permit. That stock's worth zero, just about. And that can, that's the downside. That's the other end of the spectrum, if you will.
All right. Well, Brent Cook, thank you so much for your time today. Before we let you go, did you want to share with the viewers where people can find you online? And any last thoughts you'd like to add? Yeah,
thank you. Again, explorationinsights.com is where we're at. Joe Mazumdar, who is an economic geologist like myself and knows a lot, knows more than me actually, writes the letter now. I'm just sort of an advisor. That's where there's information, lots of free stuff on the site. Letter comes out every weekend, plus updates and alerts. And basically letters about what Joe is buying, selling, and avoiding with his own money. No one pays us to say anything. So that's the website. And I guess final thoughts is I do believe that this year, as it rolls on, the mining stocks should be a good place to be, at least for a portion of your portfolio. And thank you. I appreciate the opportunity.
Well, thank you so much, and God bless.
All right, thanks. Bye.